GDP is out for USA and it looks pretty bad. As I've mentioned yesterday on the webinar, it doesn't matter the data, because what is actually happening is not, the market doesn't care about economic data. And it's much more in-depth about what is happening political, what is happening geopolitical, what is happening around the world. That's what actually matters for the market. But we got the GDP, it's negative 0.5%, the consensus was negative 0.2%, and the previous was 2.4. That was the GDP quarter one, okay? So looks really bad, and I don't think either way would be great for USA in a sense, okay? Especially on the situation that they are. As of, we had Trump trying to replace Jerome Powell, and just because Jerome Powell is doing his job of maintaining the rates higher for longer, because that's what needs to be done. And then Trump wants Jerome Powell to lower the interest rates quick as possible, so then he can claim himself up and saying that, I told you the rates would be lower. Well, it is lower because you literally change someone, from the government to put someone else that that they're going to do that. So it's kind of interesting story. But anyways, I don't want to get political here because that's not what we're here to talk about. So we had a lot of risk on to this week, all right? So risk on currencies like Australian dollar, New Zealand dollar, Japanese yen, euro, pound, all of those currencies were very strong. And the reason is simply because Donald Trump had an attack on Iran and made Iran and Israel sort of ceasefire, okay? So I know it sounds very like strange, like he attacked Iran and then he's like, you guys need to do peace, unite. Now it's time for you guys to be peaceful with each other, but I've just attacked you both. So Iran. So it doesn't make much sense, but that's how how Trump works pretty much. So that being said, markets sort of reacted very positively to this because Israel and Iran actually did a ceasefire until Israel attacked Iran again, and then after that, nothing was heard about Iran sort of striking back Israel, and since then they just stopped. So they literally stopped. Doesn't look like we're gonna have anything maybe a counter strike or anything like that happening in the coming weeks, but we don't know. So the tensions remain elevated, and for this reason, oil prices keep falling. Okay, so with oil prices lower, we had the opening on Monday, a gap up because of we didn't know what could potentially happen between USA now fighting Iran. It was all kind of strange stuff, but anyways, USA attacking Iran. And then Iran sort of, agreeing to the ceasefire, Israel bouncing back, Iran didn't react. So market is like, okay, that's good. So risk on appetite back into the table. Oil prices drop very heavily. With that, the Canadian dollar does drop as well. It's a very correlated currency. So anytime we have a lower oil price, we have lower inflation, and we have a lower Canadian dollar price as well. Okay, so that being said, I think for the next couple of weeks, what we're going to be looking at is quite a very similar approach. Maybe next week, most of the whole market will be waiting for the NFP and what will actually happen with Jerome Powell. So we're going to most likely have something happening over the weekend, most likely. So my positions are being closed today due to, I don't want to carry risk during the weekend, especially on this scenario, and I would suggest that everyone sort of manage the risk as well. I'm not saying that it's going to happen something, but if we look back in the last 6 months or the last 3 months, it's exactly what has been happening. It's always been something on the weekends. Okay, so really interesting how the market is reacting to risk on and risk off. I've also made a video about, please Dave, put down in the description so people can watch how to trade risk on and risk off markets. And I will be doing a blog today about it, so an evergreen about it. And for you to get access to that, you just need to be into the Telegram group. So join the Telegram group also, it's on the description. And don't forget to subscribe to the channel, because that helps us grow the channel and show YouTube that this is a good quality content and spread out to other people like you. So that's pretty much the recap for the week. Risk on, risk off, risk on, risk off, and ended up to be a risk on market. Australian dollar, New Zealand dollar, all the risk on currencies, have been pretty good. Gold keeps sort of, in a sense, it's supposed to be falling because of the risk on. But when we look at gold prices, yesterday it was trading at 3,300 and something. So it doesn't change much in a perception. I guess we nearly had our entry, as I say, we nearly had our entry caught at 3,250. I've called that yesterday because of the risk on. People don't want to have the yellow metal, so they just want to sell it. I don't want to touch on that, okay? So I continue to agree that gold can possibly come to 3,300, right? So that's a $50 trade from 3,350 to 3,300 for those who captured that opportunity yesterday. All right, guys, thank you so much for being with us another week. Don't forget that every Tuesday, Wednesday and Thursday from 4 to 5 p.m. we have the webinars, and it's free. And that's the best part. So you can just literally join me on your convenience. And that's it. If you've not yet subscribed, what are you waiting for? Just hit that subscribe button. We're here delivering content every single day. And I hope to be able to help you in some sense, okay? Thank you so much. Have a great weekend. Take some time to review your trades. Take some time to rest, study, spend some time with your family. That next week we are back on full track. Thank you so much. Have a great weekend, and I'll chat to you next video or in the next webinar, just depends, but most likely into the next video on Monday. Thank you all. Bye-bye.